Construction and property deals in China have slouched. Small businesses have shut because of rising costs and weak trades. Debt-laden local governments are cutting the pay of civil servants. China's economy decelerated markedly in the final months of last year as government measures to restrict real estate enterprise hurt other sectors as well. In today's video, we'll talk about problems China is currently facing, apart from the Evergrande crisis. But before that, make sure you press that red subscribe button along with that tiny bell icon to get updated every time we post new videos. Let's get started. The extremity at Evergrande, the world's most obliged property company, reached a climax last month when it officially defaulted on offshore bonds. But the rest of the saga could take years to unfold. The builder, a symbol of China's heavily leveraged property sector, shook world markets when it started missing offshore bond payments in September. It took 3 months for Evergrande, counted down by construction detainments, lawsuits, and its vast arrears of more than $300 billion, to formally default, by which time liquidity troubles had engulfed the sector. But this isn't China's only problem. An Omicron outbreak in China is transferring jitters through supply chains as manufacturers and shippers brace for disturbance inside the world's biggest trading nation if it can't contain the fast-spreading variant. So far, China's not facing the problem seen abroad, like crunches of some foods in Australia or Japan, or an estimated 5 million workers staying homesick in the US last week. But with an end to COVID-0 doubtful as China prepares to host the Winter Olympics in the coming months and a series of political events later in the year, policymakers have to decide how much to increase restrictions and consider how that will hit a formerly decelerating economy and global trade. The decelerating economy poses a dilemma for China's leaders. The measures they've assessed to address income inequality and rein in companies are part of a long-term plan to cover the economy and public security. But officers are cautious of causing short-term economic insecurity, particularly in a year of unusual political significance. Unlike in the United States, inflation is cooling in China, giving the central bank room to further reduce borrowing costs. The surge in factory gate prices looks to be abating. The producer price index rose to 10.3% in December, still high. However, it's down from 12.9% the former month. The pace of consumer inflation slipped to 1.5% compared with 2.3% in November. Both were lower than economists projected. China and the United States, while on divergent paths, have a lot at stake in getting the policy blend right on pandemic administration and financial policy. Despite the popular notion the two powers are engaged in a Cold War, they still depend on each other. Beijing posted a record trade surplus in 2021, according to numbers released Friday. Global production is dependent on supply chains that revolve around the continent. Export earnings last year helped neutralize the domestic deceleration and underlined that manufacturing can't really function without China. So that's all for today's video. Let us know your views in the comment section below. And don't forget to like this video before leaving. Thanks for watching.